Hi, I'm Rafaela Vitória, Chief Economist at Inter & Co, and today I'm here to talk about the economic scenario and our perspectives for 2025. We are ending 2024 on a positive note. The economy in Brazil grew faster than expected. GDP is expected to grow above 3% this year, and this was mostly a result of a very strong demand from families. The level of employment and income in Brazil grew much faster than expected this year. The employment is at record highs. The average income of families in Brazil is growing faster than inflation. This has put some pressure on inflation on the other side. So we end the year with a strong economic growth, but on the other hand, we are also worried about inflation accelerating towards the end of the year. Inflation in Brazil is going to end the year at around 4.5%, a bit higher than the target of the central bank, which is 3%. This acceleration of inflation towards the end of the year has put pressure in the markets. The central bank has resumed a cycle of interest rate tightening towards the end of the year, and we now expect the Selic rate to end 2024 at 11.75%. We'll have a 50 basis point increase in the target rate in December, and this cycle of tightening will continue towards the beginning of 2025. We expect the Selic rate to end the cycle at 12.25%, but there is still a bit of uncertainty looking at 2025. Inflation is higher, the demand is also very high, the economy is growing faster, but the government is expanding its fiscal balance. And this fiscal expansion, which was positive for the economic growth, was negative for inflation. Looking into 2025, the government is about to announce measures that might curb this fiscal spending, and this might bring some positive outcome towards the next year. If those measures are satisfied, if those measures are robust enough to bring the fiscal risk down, we can see a relief in the FX, and we can also see the expectations for inflation in 2025 reducing. And this will be very important for the central bank to end the tightening cycle. If those measures are not strong enough, we can see a continuation of the deterioration of inflation expectations, and this would mean that the central bank might have to increase interest rates a bit higher than expected. So 2025 is still a year of uncertainty. Economy will continue to grow, although we expect GDP level to be a bit slower than 2024, closer to 2%. Inflation a bit higher, but still getting closer to target. But with an uncertainty, what will the central bank do in reaction to this scenario of fiscal risk increase? As for the international outlook, we also see some uncertainties in 2025. Looking into the US, there might be some policy changes with the new government, and there is some worries about inflation accelerating again in 2025, and if the Fed decides to keep interest rates higher for longer, this can mean that we continue to see a strong dollar scenario with a bit more pressure in inflation in Brazil. We are also looking at China decelerating growth in 2025, with growth coming more from consumption and services in China and less from exports, and this can also mean commodity prices might be softer next year, and the dollar will continue to be strong next year. So the international scenario for the economy in 2025 will be an economy of a slower growth, still some persistent inflation, and interest rates that might be a bit higher for longer.